Good morning. This is Larry McMillan with a stock market update on Tuesday morning, March 15th, before the market opens. So we're still in a downtrend. Not a whole lot has changed in the last week. The S&P is again probed towards a lower area. It had a new low close, not an intraday close. So it's still finding some support in the 4,100 to 4,200 area. But the chart is in a downtrend, and that's bearish. It's bearish overall. And so we're maintaining a core bearish position because of that. On the upside, oversold rallies could carry up to about 4,300, maybe 4,400 in that area between the 20-day and 200-day moving averages. But even breaking through there would not necessarily negate the downtrend. That would take something on the order of breaking out over 4,600, which is going to be fairly hard to accomplish, I believe, in the short term. Equity-only put-call ratios are on sell signals. They've moved once again to new highs, new relative highs, not all-time highs. And so as long as they're rising, that's bearish. Now, they are in very oversold territory. So it's not going to take a whole lot for them to try to turn around and generate another buy signal. But as we've seen twice this year already, those buy signals have been pretty short-lived, and quickly the put buyers regain control, forcing the ratios higher and keeping them on sell signals. Breadth has been, bad again, and so we're seeing our breadth oscillators dipping heavily into oversold territory, again, also on sell signals. And the same can really be said for new highs versus new lows. A lot of new lows, so it's a negative indicator, but also in very oversold territory. So we're getting all of these similar things from the market internals, but the market's still going down. So you can't jump in and buy just because things are oversold. You need to have a confirmed buy signal. Now, one place that we do have a confirmed buy signal is in the VIX spike peak, and that's still holding its own. VIX would have to close above 38 in order to negate that, and it hasn't. It's sort of amazing that VIX has not responded better, but it is what it is. And so the trend of VIX is higher, though. You can look at the VIX chart. You see it's trending higher. Whether you use our definition of trend or you just use your eyeballs, the VIX is in an uptrend. So that's bearish for stocks as well. The construct of volatility derivatives is also bearish in that the term structure is sloping downwards. Now, the March VIX futures are expiring today, this morning actually, and so April is now the front month, and May is the second month. So we'll be watching the price of April versus May. Right now, April's trading about 70 to 80 cents higher than May, so that's still bearish. So again, all of these things are adding up to a pretty bearish set of indicators. And I realize that Ukraine news can have some effect and all that sort of thing, but I do think that this is a more severe bear market than just, the end of the Ukraine crisis would dictate. And there doesn't necessarily seem to be an end to that in sight either. So maintain the core bearish positions, expect oversold rallies. Be prepared to trade them around the core bearish position on confirmed buy signals. I invite you to visit our website and check out our newsletters, our daily newsletters, where we keep up to date on all of these things with a great deal of frequency. Meanwhile, have a great week trading.